Hello, we are here at the Hindustan Unilever headquarters, meeting with Sanjiv Mehta, MD and CEO of the company.
We'll be discussing a whole range of issues today, right from inflation, HUL's acquisition plans, to what's happening in the FMCG industry.
See, the past few years have been a challenge for any CEO, what with COVID, supply chain disruptions, slowing demand growth, and now a war in Ukraine that's sent inflation through the roof. What are some of your important learnings from these past few years? And would there be one or two things that you would do differently if you could go back in time?
I've been a student all my life. So there are several learnings that have come in. But if I have to pick up a few and articulate, one is, all the industries, most of the industries, used to drive for efficiency and productivity improvement. I think one thing which has come in very clear, loud and clear during the pandemic is the need for resilience. And resilience does imply that you will have a spare capacity. Yeah? Otherwise, you won't have an inbuilt resilience. But the critical bit is to understand where in your value chain will you drive for efficiency and where in the value chain will you have resilience. So that's first learning. The second important bit is adaptability. The US Army used to talk about the world being VUCA, and volatile, uncertain, complex and ambiguous. It hasn't gone away. But I think American futurists rightly talks about the world being Barney, brittle, anxious, non-linear and incomprehensible. So if you put the VUCA and the Barney together, that are the choppy waters that we have been navigating in the last few years. So the critical bit over here is how adaptable as an organization you are. When we were growing up, we would make a strategic plan which would run its course for the next 3 years. Now when you make a strategic plan, many times becomes irrelevant after 3 months. So the important bit for an organization is the agility, the speed with which you are able to adapt. I think that becomes very critical. The third learning has been that information, if you wait too late for precise information to come in, or if you wait for precise information to come in, you'll be too late. And you have to put together disparate information and make sense out of it. I call it sense making. And this is a skill which comes from experience, knowledge, and to some extent intuition. And what data and analytics do is help you tremendously in this quest for sense making. The fourth learning that has been coming, and which is something which we've been telling all our colleagues, is, whenever we used to talk about leadership, we used to talk about a person very good in, say, strategy, a person who is a great orator, articulates very well, a person who is very good in execution. But we never talked about compassion. I think one thing which has again come home to roost, how important compassion is for leaders. Compassion for your neighbors, compassion for your people, compassion for the community in which you live. And these are some of the things which have become absolutely loud and clear, and they were not so pronounced before the crisis that we have seen in the last few years.
What are a few things, sir, that you would have done differently in these past years?
Oh, certainly. I'll give you a very clear example. When last year in 2020 January, when COVID came into China, we set up a crisis team. And the crisis team brief was that we were importing chemicals from China. If those chemicals supply gets disrupted, how will we mitigate those risks? But we never thought that risk of pandemic or COVID would come into our country. Otherwise, I would have got a 3 months of head start. You know, when we do our risk assessment exercise, it's not the pandemic hasn't come in our window. It has. Even the zoonotic diseases came into our window. But we never thought that it will really play out. Yeah, so I think, for instance, all of us are conscious that if we are not able to control global warming, many parts of the world will go underwater. Yeah, we are aware. But is any one of us making mitigating actions for it? The answer is no. But I think few years down the road, if as a world we are not able to control the temperature, then we will have to have our plans, keeping in perspective things perhaps which are further down or distant in the future, but happening at a much greater speed. So it is not going to be placid waters anymore. And we have seen it over the years, right? From the Gulf War. Yeah, then I was running North Africa, Middle East, where we had the Arab Spring. Then we had financial crisis. We had COVID. In India, we had demonetization. Yeah, there would be slowdown of economy. There would be pickup of economy. And you have to be ready to be very agile, very focused, very adaptable, build in resilience in your value chain, and lead with compassion.
Okay. Coming to the industry situation, could you sketch out the demand situation a bit for our viewers in terms of how is it looking in urban areas, how is it looking in rural areas, and what are some of the, what's your outlook, say, in the next 6 months to 12 months?
Yeah. If we take a step back a bit, pre-COVID, we'd seen the rural slowdown happening. And then the COVID happened. And rural proved to be much more resilient for various reasons. Amongst them, I would say, is first the spread of COVID was certainly in the first wave, was more concentrated in the urban areas as opposed to the rural areas. The second was government interventions, the direct transfer of money, the free food grains, the increase in the outlay of Manrega, all helped the cause. And I think that was absolutely the right things to be done, because one of the things you expect every government to do is look after your people and those who are not so well off. So rural proved to be very resilient. It also proved to be resilient because urban markets took a lot of battering because stores were closed, economic activities came to a halt, modern trade came to a halt. So we saw that the rural was growing at a much faster pace. Then from last year onwards, we started seeing as the economic activity started picking up, the modern trade stores came back, urban activity started, urban growth going back. And rural against a high base started to come down. And so it has been coming down. And this got exacerbated with inflation coming in. I've been now working for Unilever for nearly 30 years. And I have not seen this kind of inflation. There used to be a period when the crude oil price went up. Yeah, we remember in the first decade of this millennium, there was a time when it went up to 135, 140 before the financial crisis. But we've not seen a period where crude oil-based derivatives, palm oil, and everything else linked to it go up the manner in which it has gone up. So, and in a country like India, where we may be a $3 trillion economy, but the per capita incomes on an average is 2,000, average, yeah. So there's a large section of population who still have very little income in their hands, and this kind of inflation does prove to be a real hardship for them. And when you have prices go up, the way it operates is that people who have more money, they go for more value packs, large packs. People who have less money, they titrate the volumes or go for low unit price packs. And when the prices go up, people do not have unlimited money, and prices are not going up just for FMCG. Yeah, it's going up for nearly everything. Yeah, edible oils are going up. I mean, it's not going up for just packaged goods. Edible oils are going up. Food grains are going up. So they have to, then the outlay comes down, and then they veer towards more essential products, and they titrate the volume. And so whatever they can get within that pool of money is what they go in for buy. So your volumes take a knocking when you have this kind of price increase.
So to an extent, do you think people are kind of falling off the consumption bandwagon?
See, the penetration is not going down. It is not that people have stopped using detergent powders or people have not stopped using personal wash powders. Some discretionary items get impacted, but we must also remember that discretionary items are more used by people who have higher disposable income. Yeah? Discretionary items got impacted more by the COVID lockdowns or the threat of COVID or work from home. That's where discretionary items. So I would see a few quarters where the volumes will be under stress, and that's where the situation would be.
But then, do you think Indonesia palm oil ban is now going to, further worsen the situation? And, which few categories will be most impacted?
From what I understand about Indonesian palm oil, Indonesia consumes about 30% of the palm oil on a normative basis of what they produce. And this is a big export item for Indonesia. I can understand them being parochial and putting in controls to control the price for the 30% which is consumed domestically, but I don't see it as a long-term issue. And the palm oil that we use, the fractionation unit, that has not been put under ban. So at this moment in time, I don't see it as a major issue. Leave aside the price. But from an availability perspective, I don't think this would be an issue for us.
But the prices would go up further.
Prices have gone up, prices have been going up. But what happens that if prices remain high for a longer period of time, then people look at alternatives.
So a slowing market also means that valuations have tapered in general. So does that make you do a rethink about M&A? Does do M&A opportunities look more attractive? And I just wanted to ask, in addition to that there's talk about HUL being interested in spices. I mean, is that have you taken a rethink on staples as a market that HUL would want to be in?
See, let me put this way. The news about MDH was wrong.
Okay.
Completely false. No basis to it. But if the story is about, are we looking at inorganic growth? Yeah. If you go back to the last few years, we first acquired Indulekha brand, which is proven to be extremely wonderful acquisition. Then we went in for Aditya Milk, which was focusing on the south of India, which was basically strengthening our footprints in ice cream in south of India. Then we went in for GSK, which was, I call it the mother of all acquisitions. And then we acquired VWash, which is another fabulous brand, intimate hygiene brand, and doing extremely well. So we've had a good series of acquisitions. And are we on the drawing boards looking at acquisitions? Yes, we always do that. For us, organic growth is very important, but we also look at inorganic opportunities. But when we look at inorganic opportunities, we look at the strategic fit, we look at the evolution of the brand, where it is in their S-curve. We also look at what would be a fair valuation. And then, of course, an acquisition happens when a seller is also willing to sell.
True.
Right? So we keep looking at it, but just because there is a fashion to acquire brands, we don't join that race. Yeah, we would not be in that race. And do we have a firepower? We do. We are a zero debt company. And the way we did the GSK deal was fabulous. We used higher price earning ratio, and we used the share swap to acquire this fabulous brand. And today our market cap is over 5 lakh crore. So yes, firepower is there.
More specifically in food staples, have you changed your approach towards food staples?
See, staples for us, we had a rice brand, Indus Valley, which we've sold off. We have Annapurna.
In the south?
In certain pockets we have. And that's not a big thrust area for us. For us, it is more about creating a brand where there is more technology involved, more value added involved. And we would not like to be in the commodity space. We would like to be more where we can create a great brand. And if you look at our foods portfolio today, we have a fabulous business in tea where we are the volume and value market leaders. We took back leadership a couple of years back, and we have kept strengthening it. Coffee is a good play for us. Kisan is a wonderful brand where we were in jams and ketchup, but now we have gone in for peanut butter. We have extended our spreads into mayonnaise. Hellmann's mayonnaise we have launched. Nor we are big in soups. We are now also looking at cubes. We have launched in certain parts. And then it is the big play of HFD.
But what about D2C brands? I mean, there are several companies have come up in that segment of late, right? I mean, in beauty and personal care as well as health and nutrition segments. So are we going to see any acquisitions from HUL?
First, let me give you my philosophy about D2C brands. E-commerce is there, whether it is COVID or no COVID, because of the sheer assortment and convenience is bound to play an increasing role in the FMCG space. And for us, that's a big thrust area, and we had been investing in e-commerce capabilities much ahead of the curve. And today, because of our thrust on technology, we are so proud to say that 20% of our demand capture is done digitally. Yeah. So we have a big part of a business where it is digitally captured. As far as e-commerce is concerned, whether it is pure play, whether it is omni-channel, or whether it is through our own sites, we are into play in every segment. Yeah, a Lakme, for instance, it has the largest followers on Instagram of any beauty brand. And 30% of our sales are coming from e-commerce today, including our own site. So for us, that will remain, and we have also carved out a separate premium business unit with the entire focus on digital first brands. So Simple, Love Beauty and Planet, yeah, Dove Baby, these are brands which are just focused on e-commerce through the premium business unit.
How are these doing?
They are doing reasonably well. We are very satisfied with the entire game that we are playing on e-commerce. And our thrust will continue. Now again, when it comes to acquisition, I'll come back to the same thing, that it has to be a strategic fit. We will see where it is on the stage of evolution, and it has to be at a price which makes sense to us.
But we'll see more innovation from HUL
Certainly.
when it comes to D2C.
You know, for us, design for channel has become a very important priority. Design for channel is where you, for your existing brands, you ensure that you have your pack architecture in line with what will be relevant for each channel. Similarly, we are innovating, looking at e-commerce as a very important channel. It's one of the important channels. We must understand that in a country like India, general trade dominates, and it will continue to be the dominant channel even 10 years from now.
What is your assessment of competitive intensity in the FMCG market in the past 2 years? Has it stepped up? Has it stepped down? And you have companies such as ITC and Patanjali making claims, that they want to be the largest in the industry. So how do you view the competitive situation?
First is, I think competition is good for consumers. No question about that. Now, if we look at a country, the per capita consumption of FMCG is just about $45. If we look at a country like Indonesia, it is 2x of India. China is 3x of India. Philippines is 4x of India. So when it comes to runway to grow, there's a massive opportunity. The second point I want to make is, this is not a zero-sum game in India. We have not reached a level of saturation that if someone else grows, it will be at my cost necessarily. No. So you keep growing because the market is so much more to grow. The third important bit is that a good competitor brings out the best in Hindustan Unilever. Yeah, and it keeps us on our toes, and it allows us to do the best that is required for our consumers and for our business. Now, if you pause and look at our track record, in the last 9 years, we have doubled our business. We have trebled our profits. We have quadrupled our market cap. And when we say we have doubled our business, we've added 25,000 crores. Now, 25,000 crores is more than the total turnover of any of our competitors. So while we have our feet on the ground, we are not complacent, we respect all our competitors, we're not going to give up our leadership. Let me be very emphatic on that.
But does unorganized segment pose a threat, especially now when consumers are down trading?
We have a portfolio where we talk about, we straddle the price benefit pyramid. I'll give you an example. If you look at a hair category, we have a Clinic Plus shampoo where the largest selling SKU is at 1 rupee. Great brand, consumers love it, great brand salience. And can you get anything really good at less than 1 rupee? No. But if you want to go up, we have a mass beauty brand, Sunsilk. If you want a salon kind of hair at home, you have Tresemme. If you want a brand which is on repair, and taking good care of your hair, it's Dove. And if you want a premium natural brand, there is Indulekha. So we straddle the price benefit pyramid. So even if there is down trading, we have got brands to cater to that. And not only that, take laundry for instance. Laundry today, the biggest selling brand in laundry is Surf Excel. It's also one of our largest brands, selling more than 5,000 crores. It's a premium brand. It's on stain removal, great clean. But we made it accessible. You can get Surf Excel for 10 rupees. So we have a portfolio which can cater to it. That's the reason why the last 2 years have been tough for the industry. Our market share gains have been the highest in a year, say compared to a decade or more than a decade.
But sir, there are consumers at the bottom of the pyramid, right? I mean, who would move to using products from local players.
Let me also give you an insight. When times are tough, people can't afford to waste money. And when they can't afford to waste money, they go after trusted large brands, provided they're accessible. So brands like Lifebuoy, brands like Lux, brands like Clinic Plus, brands like Wheel, brands like Taza. These are the brands which are trusted by millions, and they're able to compete at those price points.
It's interesting that you're talking about accessibility because you've also mentioned this plan to have bridge packs,
That's right.
So how does that fit in? Because now you're, for instance, someone who's been used to paying, let's say I'm saying 1 rupee for a sachet of Clinic. you might want to take it to, let's say, 2 rupees and give them a little more volume.
That's right.
Right? So how?
The important bit is there will be some consumers for whom 1 rupee would be very important.
Right.
There will be some consumers who would say, I want more value. And 2 rupee is still affordable for me from an outlay perspective. And they would be very happy to migrate. Yeah? Because what happens when the cost of commodities go up, then large packs, you can take a price increase. Yeah? If you're a 100 rupee bottle, you can go to 105. But if you're a 1 rupee pack, yeah, is going to 2 rupees means doubling, which may not be sensible. Then what you do is you look at reducing the volume a bit. But if you reduce the volume beyond a point, then it may not give you the kind of clean the consumers are looking. So the question is, you can't reduce quantity below a certain point. Yeah? Then you need to ask yourself, if the commodity price still keep going up, how do you ensure that you're able to protect the business model of that SKU while ensuring a value to the consumer? That's where a bridge pack comes in.
So this is something which is quite unexpected in the sense coming in the industry. It's going to probably shake up a lot of the way people have thought about low price packs. So could you tell us, our viewers, a little more about your plans in bridge packs? Is it going to be across categories? Is it going to be national?
Working it out.
Okay.
We must also understand, Ravi, that price is not the only dimension the consumers look at. Invariably, what they look at is price value. Are you getting the right value for it? And many times, like I said, at the beginning of the conversation, that many consumers are veering towards large packs. They're going towards large packs because they get higher value for it. And if the consumers find that between 1 rupee and 2 rupee, they get a better value for 2 rupee, they would migrate towards 2. But there would be still consumers who would say, I'd rather stick to 1 rupee. So be it.
So this will roll out in a certain period?
So it's in the drawing stages, we are working it out, and you'll see it happening.
But then will the categories which are most impacted by inflation, will we see there the rollout of bridge packs?
The 2 categories which are most impacted are skin cleansing, which toilet soaps because of the palm oil, and the second one is laundry powders because of crude-based derivatives. So these have been the most impacted so far. But increasingly what we are seeing is the impact coming in other categories. Hair because of SLES, which is again which is a palm-based derivative, there it's going up. Then the packaging material is going up because most of them are polymer-based. That's moving up. So the prices are going to go up. And they're going to go up till we reach a point where the commodities start going down, and I believe one of the trigger could be the settling of the Ukrainian crisis. That could be a trigger because if you look at the genesis of this, it was first the supply chain disruptions. Yeah, because during the harvesting season, workers were not there, so the supply came down, and the supply came down, so the prices went up. Or the shipping lines got choked, or there were no laborers available in many parts of the world. So there was, again, basically the supply chain movement got curtailed. So these were mainly driven by supply chain constraints, not as much as by demand. So it's still up for grabs, where in many of the commodities, is it a structural inflation or is it a supply chain driven inflation? Of course, what happens when things start going up and when geopolitics gets involved, then also speculation comes in anticipation that there would be constraints, prices are driven up further. So you need a trigger for the commodity prices to start softening. And I believe that one would be, in current times, this geopolitical settlement taking place between Ukraine and Russia, which could lead to softening of the prices.
Let's hope that happens.
Absolutely, we all live on hope.
Coming to a few questions on the March quarter results, just to give some perspective, what kind of price increases have we taken? Because a large part of the growth came from price hikes.
We took about 10% price.
Okay. And what in the current quarter, what kind of price increases do you think could land to compensate for the,
where we have been in the current context, Ravi, what we have said is there are two imperatives for us. One is the consumer franchise. Yeah, we want to strengthen. The second is we want to protect the business model. Yeah. So you would have seen over the last many quarters, margins have remained within a certain range. So our first point of call is always looking at all lines of P&L and asking ourselves, how do we optimize? Taking away all costs which are in any way discretionary. We do that. Then we drive efficiency and productivity much harder. If I were to look at my track record over the last few years, we have been delivering savings anywhere between 6 to 9% of our turnover. So it's a very aggressive savings agenda. But there are some things which we don't touch. One is product superiority. Very clear. That gives us huge edge. And we must also remember that why the consumers trust big brands is also because of product superiority and brand salience. Coming to brand salience, I've always maintained that we will keep spending money at a rate, share of voice being higher than our share of market. Yeah, because we want our brand salience to be there. Rest of the things we will optimize. And after that, the last port of call is how do we take a price increase? And again, we look at it from affordability perspective. To an extent where consumers can afford more, we take more. But what is very important is the price value. And in price value, one of the factors which is very important is relative pricing. We don't want to be out of whack when it comes to relative pricing. So yeah, difficult to predict what would be the precise quantum of price increase. But the way we see it is commodity costs keep going up, so there would be more price. The margins will be under pressure in the short term, but then we will certainly be taking over whatever are the prices, the margins that get reduced. Over a period of time, we'll get it back.
In fact, you said that you expect the second half of this year to be better in terms of margins, that margins could decline in the near term and then improve probably in the second half of...
No, we said in the near term, in the second half, the margins could come down.
Okay.
Yeah, but it would again depend on what happens to commodity price. As we sit today, we are seeing the costs going up in the quarters to come.
Sure.
I mean, discretionary and beauty and personal care portfolios did not fare well in the quarter gone by, right? So how do you see demand panning out in these categories going ahead?
First is, didn't fare well from a relative growth perspective. But let me also be very clear that on beauty and well-being, on personal care, on foods and refreshments, we gain market shares. And the story on market shares is we are winning in urban, we are winning in rural. We are winning in GT, we are winning in MT. We are winning in large packs, we are winning in small packs. And we are winning in premium segment, and we are winning in mid-tier, and we are winning in economy. So our winning of market shares has been across the spectrum of our portfolio. Yeah. When it comes to discretionary categories, we must remember that in the first 2 months of the year, we were hit by Omicron again. Discretionary gets impacted when people don't step out of their homes. Yeah, when you don't step out, you don't use the same quantum of makeup, for instance, or you don't use the same kind of skincare products. So they do get impacted, and we have seen that the March month was better than the first 2 months of the last quarter. So I would hope, as the country keeps opening up and the next variant doesn't come in, hopefully discretionary should bounce back.
How did fabric care, I mean the home care segment as you call it, I mean do much better? Fabric wash and...
Fabric wash has been on a rhythm for many years. Yeah, we have completely changed the profitability of the division. It used to be a bleeder from our perspective. Now it's a very healthy margins. We have great brands, superior products, and we have been outpacing the market for many years.
So how come, despite price hikes, you saw that sales growth was very healthy in this quarter? Was there some?
If we take, say, the last 2-3 years, there was a period when the tea business was growing at 20s, 25. Right. Yeah. There was a period when skin cleansing was growing at 20s. There was a period which continues where hair was growing at a very majestic rate. So we have the benefit of a portfolio. And there are times when some brands, we look at opportunities. And one strategy which comes in very handy for us is winning in many Indias. We don't have a pan-India strategy. Yeah, we craft strategy for the 15 clusters that we have. And each cluster has its own nuance. The competitive context is different. Brands are at a different stage of evolution. Per capita consumption is different. And whenever we hunt an opportunity, based on our WIMI strategy, press hard on the pedal.
What's the strategy behind tapering advertising and promotion spends, and will we see this change in coming quarters?
No, it's this way that, what happens, the entire industry, there can't be one-to-one correspondence between commodity price increase and your selling price. So everyone tries to optimize their spend. So the entire industry spend comes down. But what we do is, we have a hawk's eye focus on ensuring that our share of voice is greater than the share of market. And the two things we look at it. Share of voice should be greater than the share of market, and the other is there should be a certain minimal reach. And if the entire table goes down, then yes, the advertising spend goes down, but not on a competitive basis.
So does it mean that the market does not have that amount of strength that even if you were to step up advertising, it would give you returns that are commensurate with what you're spending? I mean, is that?
No, it is not that, because you are not able to pass on. Your gross margin takes a massive hit. So how do you optimize? Because a 3-4% inflation is something which the industry can very easily build into their plans and absorb it. But when you have, just to give you an idea, compared with the July quarter of 20, the March quarter of 22, the inflation, what we call as the net material inflation, went up in rupee terms by 4.5 times. So this is not something which is a normal inflation. It's a very high inflation. So the entire industry optimizes.
Let's talk about Unilever's restructuring. What will be the impact on the Indian unit in terms of layoffs, management?
Or even an overall picture. I mean, how do you?
Let me give you first a perspective of why Unilever has gone about doing it. Organization structures are meant to evolve. They are like a living organism. So you have to keep evolving. And taking cognizance that we need to be much more faster and agile, we need to be more focused, and we need to have a greater end-to-end accountability. Unilever has gone about creating what we call as the Compass organization, where there are going to be 5 business groups. And in most parts of the world, Unilever will be aligned in that fashion. Now, India is a bit different. We are a large company. We are one of the fastest growing companies, and we are a listed company here. So here, the executive leadership will remain with me of the business. And here, we will align to the 5 business groups. But unlike in most parts of the world, we will have 3 leaders like today leading the business. So beauty and well-being and personal care, which is part of our beauty and personal care, will be led by Madhusudan Rao now. Home care will remain home care and will be led by Deepak Subramaniam. And foods and refreshments, Unilever has broken it up into nutritions and ice cream. In our case, both of them will be led together as foods and refreshment by Srinandan Tan. So for us, that doesn't change at all. But where the benefit to us will come in is we believe this new structure will allow Unilever for speed of decision making, Second is, we should be getting better innovations. So all this will augur good for a business like India, and I lead South Asia for South Asia as well. So I am very bullish about the new Unilever structure. It would be right for Unilever, and it would be good for HUL.
And could you give us an update on the Horlicks business? It seems to be growing at a slower than anticipated
That's
rate.
right.
And
That's right. Yeah, let me give you a perspective on Horlicks. Horlicks we acquired when we were in pandemic. In fact, the integration took place virtually. Sure. Yeah, and the Horlicks story, the growth premise, was based on that the penetration of HFD brands are in mid-20s, whereas we know how to grow laundry business where the penetration is near universal. Yeah. The second is, we will be able to ramp up distribution. And the third is our prowess of market development. We know how to grow categories, many categories in the country which Unilever has brought in for the first time, or created for the first time, HUL. So those were the fundamentals. And the fourth one was, we will be able to get synergy from cost savings and all. First, coming back, because of pandemic, it took us longer to do the distribution integration than we would have done normally. Yeah. The second is market development, which is based on experiential marketing, which is based on house-to-house sampling and education. That did not take off at the same speed as we would have normally done had there been no pandemic. Yeah. And the third is, some of the variables in the market got changed with the schools not remaining closed, the children at home, the mothers have many more alternatives than when the kids are going to school, you give them a glass of Horlicks. So some of the dynamics very clearly changed. But I am as bullish about Horlicks as I was when we acquired the business.
So what can we expect to see in the next, say, one or 2 years in terms of...
it will get back, it will gradually get back to the growth that we were looking at. I'm very confident about that. You know, the high science range we have launched, the Mothers Plus, the Diabetes Plus, they're doing extremely well. We have started now putting activities back on market development. The distribution integration is done. Our cost savings is running ahead of plan, and we are putting big money about it. We are re-looking at the whole communication, and I'm very bullish we'll get back into it.
Mr. Mehta, there has been tussle between traditional distributors and online B2B platforms which have come up in distribution space of late. Has that been resolved? What's the status?
See, between us and our distributors, there was no friction. We have a great relationship with our distributors. We have 3,500 distributors, and we are committed to them. A large part of our business is through the distributors. And with distributors, we have a great relationship. Many of them are multi-generational distributors. They're not the first generation distributors. And our endeavor has to be very clearly, we bring in better technology to them, we bring in better practices to them, and we allow them to grow the business. If you look at Shikhar app, allows our distributors to bring in the benefit of technology, because all those outlets which are today adopted by Shikhar, or who adopt Shikhar, they are serviced by the distributors. So I didn't see any issues with our distributors. Our distributors have got a great relationship. And even now I see no issues at all with our distributors.
One of the things that we heard in your conference call was that you established factories, closer to where your markets are.
Yeah, I'll give you a bit of perspective.
And even warehousing for that matter.
No, we have a whole we have redrawn the entire supply chain map. And this started with GST. GST gave us the flexibility that we don't need the 40-odd fulfillment centers that we had dotted across the country. GST and WIMI together allowed us to recraft the strategy on supply chain. So rather than having supply chain factories, many fulfillment centers, and supply chains which are catering to a certain product, we have now moved to multi-category factories, bigger factories, closer to the consumers, and brought down the number of fulfillment centers from the 40s to the 20s. And the second thing what we are doing is highly automating them. Our idea is that one is digital factories we are creating, like the one we have done in Tapada, which has now been rated as the lighthouse factory by the World Economic Forum, with a high level of digitization over there. And the second is, we also want to reduce our carbon footprints. So the closer they are to the consumers, lesser would be the kilometer miles or the ton kilometers that our goods would travel.
So the pandemic has not changed.
Oh, our plan goes on. Certainly not. Because even if you look at it, during the worst of this period, we have kept growing. Yeah, as a business, even in, we were hit very hard during the last few days of 2020, March 2020, but we still grew at 6-7%. We grew double digit in 21. We grew double digit in the year ending 22.
Finally, if you were to give an overview of what is your perspective of the FMCG industry, more importantly for HUL in the next 1 or 2 years, and which are the categories of growth, what could be some of the new products or new categories that people could see HUL getting into.
First let me tell you, none of the segments in which we operate are anywhere close to maturity. So there is headroom to grow everywhere. Yeah, and the growth could come through penetration, the growth could come through upgradation, or growth could come by increasing consumption. But there is headroom to grow everywhere. That's point number one. Second is, we have market leadership in over 80% of our turnover. The third important bit is, we have absolutely great brands. Yeah, brands which are big, which are trusted, which we keep renovating and innovating to make it contemporary. The fourth is, we are building massive capability under our Reimagine HUL agenda, where we want to be the most intelligent consumer goods enterprise. And last but not the least are our people. We are the employer of choice in the country. We're able to recruit the best possible talent. And our people are behind all those initiatives that I talk about. So I'm very confident, Ravi, that it will be tough. It is going to be very challenging, but we will navigate. We will have to adjust our sails, but we'll come out winners. I believe that HUL has never been as strong as it is today. So there will be turbulence, there will be choppy waters, but this is a great market for FMCG, absolutely great market for FMCG. And let's say it is not a zero-sum game. And what a great place for a company like HUL to be in, where we have over nearly 95% of the households using one or more of our brands, where we have great market leadership, great capabilities, where we have deep roots, where we align ourselves to the national agenda, and we have great talent. So I am very confident about HUL's future. While we may be a 50,000 crore company, let me say very confidently that our best is yet to come.
Okay. So thank you very much for your time. It was a pleasure talking to you and hearing your views and how you patiently answered all our questions.
Thank you so much. It's been a real delight speaking to you all.